most respected gurus and checks. I'm sure you have got yourselves enlightened a little more in detail and depth of the GST concepts and facts. So it is, I'm sure it is much easier for you probably from now on that you convey whenever you are in your classrooms and addressing your own respective students. So with these very little words, let me take this opportunity to first of all introduce our most respected faculty for the afternoon, Rajeev, who's actually based in Chennai, but we are very fortunate that he is in coincidence that he is in Cochin today. Somebody who's been a renowned GST expert or GST faculty for all of us at the Chartered Accountants Institute, not just at the institute. He is also a company secretary who's also finished his BBA with Calicut from Calicut University with rank 1. And he has also undergone his ICAI Chartered Accountancy course with scholarship. He's held several workshops and sessions for ICAI, for GST department, for MSME, for corporates, for various forums. So that is the kind of renowned faculty he is, the renowned expert he is on GST. He is also advisor to a lot of multinational firms, corporates who has a turnover of 50,000 crores plus. So that's the kind of exposure and experience he handles. I'm sure it's going to be a great booster for all of us to be having him. He is also a great author for several references and books on GST. And he is co-opted member for the Chartered Accountants Institute for the Information Technology and Digital Transformation Committee of Southern India Regional Council. And he has also been in media several times for all his interviews and articles regarding GST. It is a great pleasure, Rajeev sir, that you are joining us today for the session today. Wholeheartedly welcome on behalf of each one of you.
Thank you, Chairman.
I should also wholeheartedly welcome the man who is behind this entire show. I should give him 100% credit for the effort that he has put in. Truly amazing. I'm thankful to Roy Varghese sir and wholeheartedly welcoming Roy Varghese sir to the session today. I am also most respected participants and faculty members. Please continue to interact. I get to see some good interactions in the WhatsApp group also. For any doubts, queries, clarifications, we are all here. Just on a chat box or on the Q&A box, please feel free to ask them. So let us have another great day of learning ahead. Wishing you all a great time of learning today. Thank you so much. Thank you. Back to you and over to you, Rajeev ji.
Thank you. Very good afternoon to one and all present here. First of all, let me thank the young and dynamic chairman of Ernakulam branch, CA Ranjit Warrior, and the past chairman, Roy Varghese sir, for giving me an opportunity to share some of the best professionals, teaching professionals, I would say, in this very afternoon. See, there's a saying before getting into session, there's a saying that Mada, Pida, Guru, Devam. That means after mother, father comes, then your teacher comes, then only the God comes. So God is having only 4th priority, whereas teachers are having the 3rd priority. That shows the kind of importance this profession carries, the teaching profession carries. And whatever you are, wherever you are, you can find some of your students for your help at any point of time. So even to be very honest with all of you, even it was my dream to become a teacher very long back when I was a student. Though I could not do it as a full-time profession, but still directly or indirectly, I am also being into some kind of part-time teaching. So I have a great respect to all the teachers who are enlightening n number of students, because they can do a lot of changes to the society through the young students, because whatever you are showing to them is going to be going to have an important impact on the country's future. So with a great respect and with a with a honor of respect, let me take this opportunity to share some of my thoughts. I'm not here to teach, but I'm here to share some of my thoughts and experiences on this landmark taxation law called GST law. And I know that all of you would be having an understanding on the basic concepts. So what I'm trying to do today is to share you a couple of experiences and a couple of thought-provoking questions, so that you can at least understand that, okay, these are all the intricacies involved in this particular section or in this particular area. So today I am going to handle 3 important topics. First one is the GST registration. Second, invoice, tax invoice, debit note and credit note. And third one is e-way bill. But let me tell you frankly, the 2 hours is not sufficient to convey the entire intricacies, the complete intricacies till today for the last 4 years. That means since 1st July 2017 till today, the kind of amendments, the kind of case laws, the kind of changes undergone to this particular provision, it requires more time. When I was handling some sessions on e-way bill for 3 hours, 4 hours, still not sufficient. But my objective here is to at least share as much as possible today. At least that will give you a thought-provoking way where you can do further research on it. So with that, let me just start my presentation. The first one is on GST registration. Let me tell you, initially I will be going little slow, and then I will increase my speed so that we will be able to cover as much as possible. So I hope that there won't be an issue as far as the speed is concerned. So how I structured my presentation today on GST registration. First, we will see the relevant provisions, act, rules, notifications, and circulars. Second, the brainstorming session, where we can all look at the law from a different perspective. Because let's stand outside the GST law and think what could have been happened in this particular law for the last 4 years. What are all the intricacies involved in it? What are all the issues? Because when you read the plain act, you may not be able to understand it. So my job here is to have a brainstorm session, and normally in brainstorming more than 1 people will be there, but since it is an online session, I'll be doing this. This is a brainstorming session. But as chairman said, you can always ask questions once the session is over. I'll be available to clarify all your queries. The next would be practical issues and case studies. In the last 4 years, being practicing in exclusively on GST law, whatever the experience, whatever the issues which I faced, I can share it with you. And because I got an opportunity by God's grace to train department officials, it is actually a blessing, because whenever they get some problems, they will also consult us. That will add value to our knowledge base when we are getting into that side. So I'll be sharing everything. Now, relevant provisions under GST law. starting from section 22 to section 30 of the CGST Act 2017. All of you would be knowing that the registration provisions are mentioned in CGST law. We are having other laws like IGST, SGST, UTGST, etc. But need not worry about it because these provisions are verbatim in State Goods and Service Tax Act and even in UTGST Act. And in IGST, there is no provision for registration. They are saying that for registration process, you go and then refer CGST law. So we have section 22 to 30. They are talking about registration. They are talking about registration. Who are all liable for registration? Who are all not liable for registration? Who are all required to be registered compulsorily under the GST law? What is the procedure for registration? What do you mean by deemed registration? There are special provisions relating to casual taxable person and non-resident taxable person. Then once I obtain a registration, I may have to go for amendment of that registration certificate. What is the procedure for it? Then there is a concept called cancellation and suspension of registration. GST department has the right to cancel or even suspend your registration. And once it is cancelled, how to revoke this registration. This is the entire gamut of this particular provision for GST registration. Then comes the rules. Rule number 9 going up to rule number 26. So I'm not getting into it. Anyway, we will be discussing that over a period of our presentation. And I have listed out all the relevant notifications, all relevant circulars, which are applicable, which are relevant for concept called registration. And now we will start the brainstorming session. This is the right time for us to use a couple of, our ideas or our understanding on this particular topic. So first question is, what is the threshold limit for registration under GST law? In both the cases, in case of supply of goods, in case of supply of services. So there is a confusion in the industry. Even there is a confusion in the industry. What is this registration limit is all about? What is the threshold limit? See, when initially the GST law got introduced, they said GST law threshold limit for registration is 20 lakhs. And for special category states, what do you mean by special category states? Under the Constitution of India, they are given some states as special category states. They are, you can see it in the screen. They are Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Himachal Pradesh, and Uttarakhand. These are all the special category states. So initially, the registration requirement for these states were 10 lakhs was the threshold limit. Then subsequently, with effect from 1st February 2019, that is after the first CGST Amendment Act 2018, which came into effect from 1st February 2019, all these states said, no, we also wanted to have 20 lakhs limit. So all these states gone out. Now, as on date, Mizoram, Manipur, Nagaland, Tripura are the only 4 states where 10 lakhs is applicable. So this was going on. And suddenly, the GST Council has decided that this 20 lakhs is not sufficient. 20 lakhs is not sufficient. Say, for example, you take a stationery shop guy whose turnover is, say, for example, 30 lakhs or 40 lakhs. But he has to comply with all the provisions of GST law, which is very difficult. So they said, if you are dealing exclusively in supply of goods, then the limit would be increased to 40 lakhs. See here, there is a crux. You have to be very careful. If you're dealing only and only in supply of goods, you're not supposed to do any supply of service. Then they said the 20 lakh will be increased to 40 lakhs. And the power has been given to the respective states. The council has asked all the states who are all wanted to increase the limit to 40 lakhs. All states have given their consent except you can see it in green color: Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Pondicherry, Sikkim, Telangana, Tripura, and Uttarakhand. So for all these states, the limit is still 20 lakhs. So you have to be very, very careful. So except the special category state, we have normal states, two things: Pondicherry and then Telangana. They are also continuing with the 20 lakhs limit. Now, there is a problem here. There's a problem here. You have to be with me very carefully. You have to be with me very carefully. I'm going to discuss about an important litigation area in this particular amendment. See, the CGST law, section 22, subsection 1. 22 subsection 1 says that the limit is 20 lakhs. There in the proviso and explanations, they said this 20 lakh can be increased to 40 lakhs as requested by the respective states. Chapter ends there. Chapter ends there. You can see the provisions. You look at the screen. Section 22 subsection 1 says that limit is 20 lakhs. And here in the proviso, they said this limit can be increased from 20 lakhs to 40 lakhs. Perfectly fine. Agreed. And in the explanation, they said, if the party, if the person is dealing exclusively in the supply of goods, it's okay, fine, doesn't matter. If I am a proprietor of a company, if I'm a proprietor and I'm running some stationery shop, definitely I will be having something called interest income. Interest income is a taxable service under GST law. But by way of notification number 12/2017, Central Tax Rate Notification dated 28th June 2017, this interest income is exempted as it is exempted, and now interest on fixed deposit is an interest exempted income, exempted service. So they said, obviously, if I'm earning something, I will be having some kind of interest income. So interest income alone, if you are having, no problem. But if you are having property income, rental income, or if you are having any consultancy income, then we will not consider it. Only this is for exclusively for supply of goods. You are not supposed to do any service. Only service allowed is interest on fixed deposits. Now, they said this 40 lakhs, this is the concept. Now you look at the crux here is this notification which they have issued. Just now I showed you this notification 10/2019. The lawmaker has made a blunder here. Let me make it very with the due respect to the department. Lawmaker made a blunder here. What they did, they went to section 23. That is overall not required to be registered under the GST law. First one is those who are exclusively dealing in exempted supply of goods or services. Second says that as notified by the government. By using the power under section 23 subsection 2, they issued this notification. In this notification, they are not talking about interest. They are not talking about interest. You can read this notification. This notification provides that any person who is engaged exclusively in supply of goods, then the limit is 40 lakhs. And what are all the exceptions they have given? They are compulsorily required to be registered under section 24, means we will not give you this 40 lakhs. And if you are dealing in ice creams and edible ice, pan, masala, etc., then we will not give you this exemption. If you are taking voluntary registration, we will not give it. And these are all the states where we will not give this benefit. But nowhere in this notification they are not talking about, they are talking about the interest. So what does it mean? What does it mean? So this is for compulsory registration. They are saying that if you have to deal exclusively in supply of goods. So think of the same example where my turnover is, I am a proprietor, my turnover is 30 lakhs and I have an interest income of 2 lakhs. Then you may not be able to use this notification 10/2017. Then the moment you have an interest income, which is quite natural, if you are having an SB account, you are going to have some interest. If you are having some business, you are definitely going to have some interest. So whether this is actually applicable, something which you have to wait and watch, because now there are two schools of thoughts. One school of thought says that you have to consider the intention of the law and you have to read this as in line with the section 22, and because of that you can take the interest also in this 40 lakhs limit. So there are two schools of thought. One school of thought is saying that you have to read it in exactly as per the words which are given in the notification. That being the case, you may have a problem. So what I'm trying to say here is department may come and create some trouble for the assessees. So let's come back to our brainstorming points. So threshold limit for registration under GST law is 20 lakhs in case of normal states, 10 lakh for special category states. That too, there are two time limit: before GST law amendment and post GST law amendment, which is given here. You can see with effect from 1st February 2019. And there is an applicability of 40 lakhs, which is applicable from 1st April 2019. Because of these confusions, many people are taking a wrong decision as well while advising their clients. You have to be very careful when you're applying this notification. You have to inform the client also there is a litigation, because once department, you know how big department people will behave. So they will not understand the intention of the law. That is something which the court has to do. So this will be litigated and then it will go to the court. So the second point is with respect to supply of service. I'm still in point number 1. What is the threshold limit for registration under GST law? Let me tell you, the GST law limit is 20 lakhs on 1st of July 2017 till today. It is 20 lakhs. There is no change. There is no change as far as service is concerned. There is no change as far as service is concerned. So now, we are very clear about threshold limit. Now look at the this is the point which I was discussing with all of you, litigation prone area. Now we have understood that. Let's go to the third point. This company is having exclusively exempted turnover. One company, say for example, ABC Private Limited. ABC Private Limited is having exclusively exempted supply. No taxable supply. They are not liable to pay tax at all. Only exempted supply. Say for example, what do you mean by exempted supply? Exempted supply has been defined under 2 subsection 47 of the CGST Act, where they are saying that exempted supply means any supply which are exempted by way of notification or which are exempted by way of section 11, fully exempted, wholly exempted under section 11 of the CGST Act. And they did not stop there. They went on saying that it includes non-taxable supply also. Now the crux comes when you understand what you mean by non-taxable supply under section 2 subsection 74 of the CGST Act 2017. It says any supply which is not taxable under the law, under the GST law. That means anything you do it where there is no tax, that is considered as a non-taxable supply. So It has a wide meaning. So say for example, I'm doing only exempted supply. I'm doing only exempted supply. And if you are doing exclusively exempted supply, as I said few minutes back, there is one party who is not required to register at all. Who is that? One party who is doing exclusively exempted supply, then he need not get it registered under GST law. So assuming that ABC Private Limited is having 1,000 crore turnover and doing only exempted supply, not even 1 rupee taxable supply should be there. This is only and exclusively, if you take their profit and loss account in the right hand side, the credit side, you should have only this 100 crore or 1,000 crore. Then they are not liable to get it registered under GST law. But there is a crux comes. You think of practically, will it be possible? It is very, very difficult, because what happens? Say for example, my turnover is, I'm doing exclusively exempted supply to the tune of 30 lakhs. And I have a fixed asset, obviously. When I'm selling some fixed asset, say for example, I have a motor vehicle. I capitalized it in my system, in my fixed asset. Otherwise, I have a laptop, because at least some fixed asset will be there in the company. So I'm assuming that I'm selling this laptop, which is a taxable supply. Think about it. My turnover is 1,000 crore. But at the same time, I'm selling only a single laptop worth of 6,000 rupees. You are liable to get it registered under GST law. You are liable to charge GST only on 6,000, but still you have to get it registered. Now the question comes, is export turnover is an exempted supply? What do you mean by exempted supply? Is export included in it? Let me clarify that export is not an exempted supply at all. On export, there is no tax. That is mainly because of section 16 of the IGST Act, where they are saying that they introduced a concept called zero rated supply. Any supply, export of goods or services, and any supply to SEZ is called zero rated supply. Say for example, here in Cochin, we have Kakanad, SEZ. In Trivandrum, we have Technopark. So if you are supplying to these kind of special economic zones, then there is no GST. If I'm exporting to UK, there is no GST. But it doesn't mean that it is 0%. Many people will misunderstand that zero rated and 0% are same. No, absolutely no. Zero rated supply is a nomenclature. 0% is exempted supply. There's a huge difference. When I'm saying 0%, it is coming under the definition of section 2 subsection 47, because it is an exempted supply. When I say zero rated, ZERO rated supply, it is coming under section 16 of the IGST Act, where it is actually a taxable supply, though we are not charging GST. So export turnover of 18 lakhs and interest of 8 lakhs, interest is exempted, agreed. But when you put together, export turnover is 18 lakh and interest is 8 lakh. When you add these two, it is crossing 20 lakhs. Then you are liable to get it registered. Liable to get it registered. Now take the next example. I am a director of the company. I'm a director of the company. Let me just give you what I'm trying to figure it out in this particular case. See, there is something called the reverse charge mechanism under section 9 subsection 3 and 9 subsection 4 of the CGST Act 2017. I will repeat, section 9 subsection 3, section 9 subsection 4 of the CGST Act 2017 deals with the reverse charge mechanism. Based on this sections, there is a notification number 13/2017, Central Tax Rate Notification dated 28th June 2017, as amended from time to time. There are many amendments happened to it. Any transactions which attracts reverse charge mechanism. For example, I am an advocate. Assume that I'm an advocate. If I am providing any service to a a business entity, say for example Reliance, then I am not liable to pay GST. Though I am the service provider, the recipient is liable to pay GST. That is, Reliance is liable to pay GST. So the question here is, if I am an advocate, I am doing only reverse charge mechanism services. I am advising only Reliance. I am advising only corporates. GST law came up with a notification number 5/2017, central tax notification dated 28th of June 2017. They came up with a notification. So here the point what they're trying to say is, if you're doing exclusively reverse charge mechanism, no need to get registered. Advocates are the best example because they will do reverse charge mechanism. So notification number 5/2017 will come and say that, boss, you did not get it registered. Say for example, one of you is going to an advocate. Say for example, you are coming to me for taking an advice for your personal litigation matters. Then if I am providing any legal service to an individual, that is exempted by way of notification number 12/2017, exemption notification. So an advocate, being an advocate, if I'm providing some taxable supply which are coming under reverse charge mechanism, say notification number 5/2017 will come and say that no need to get it registered. If I'm providing exempted supply, then the section 23 will come and say, 23 subsection 1 will come and say, hey, you are not supposed to get it registered, not required. You are not required to get it registered. So here I have taken another example. Director of a company is taking consultancy income. See, for example, I am a director of a company. Say I'm a director of Reliance. And if I am providing some consultancy service, not as an employee, but as a consultant, being a chartered accountant, I am giving some consultancy service to Reliance. Then Reliance is liable to pay it under reverse charge mechanism. My question here is, if I have consultancy income of 1 crore and the FD interest of 50 lakhs, my total turnover comes to 1 crore 50 lakhs. Am I supposed to get it registered? Answer is no, because RCM supplies and FD interest. RCM is coming under reverse charge. This director consultancy income from a company, being a director of the company, exempted, and interest on FD is exempted. So I'm not supposed to get it registered. One more point, in the same example, assuming that I'm a director of a company, I'm getting 1 crore and I'm getting FD interest of 50 lakhs, and I am also having a commercial let out in Cochin or in Chennai. I have a commercial building which I am letting it out for only for 5,000 rupees per month. You are liable to get it registered because you are not only doing RCM, but also doing not only doing exempted and then RCM services, but also doing taxable services. Even if it is 1 rupee, I will exaggerate the situation once again. I'll give you an exaggeration here. My total, director of a company, being a director of a company, my turnover is, my consultancy income is 19,50,000. My FD interest is 49,000. Now this comes to 19,99,998. My taxable supply is only 3 rupees. 3 rupees. It is crossing 20 lakhs. For that 1 rupee or 2 rupee, you have to pay GST. This is the kind of scenario we are having. Now, next question is, I have 5 warehouses in 5 different states. Say for example, we have a bearing manufacturing company. See, the above one is actually happening. Actually, one of our pharma client is actually doing that. The director is taking the consultancy income. That is why I've taken that as an example. He's not registered. He's taking 2 crore as his consultancy charges, and he's also having FD, but he doesn't have any commercial let out or anything like that. He's not registered. We are also telling him, keep an eye on your other incomes. Now, we have a bearing manufacturing company in Chennai. They have 5 warehouses, one in Maharashtra, one in Jamshedpur, and one in Gurgaon, and one in Chennai, of course, and one in Pune. So these 5 warehouses are there. Now the question from the company is, am I supposed to get it registered in all states, or can I do all my business from the state of Tamil Nadu? You can very well do the business from Tamil Nadu, no restriction, but as long as you are supplying from that particular warehouse, and where you are maintaining your goods of accounts, maintaining your goods, you are liable to get it registered in each 5 states. They are having registration in all 5 states. Next question is with respect to another client of ours, where this company is actually into ground engineering. You know, Cochin Metro. Cochin Metro, what you're seeing, the construction is only from the above the ground. See, there is actually a strong foundation to be done for Cochin Metro. So our client is doing that ground engineering work. It's a German company. So they do the ground engineering. They will ensure that the piling is done properly, anchoring is done properly, and the stone column is done properly, so that the foundation is strong, so that you can construct whatever you wanted to construct. This is the job of this company. So the company is having 20 states registration in 20 states, because they will get projects everywhere. Even they are having project in Kutch. Even I have visited personally also. It is in Pakistan border, actually, in Gujarat. So that area, if you see, if you keep your leg, there is no strong foundation. So you have to wear safety measures. Otherwise, there is no strong foundation. It's like a kind of a mud there. So these people will go there. They will put a lot of piling. They will do a lot of piling. That means it's something like a pillars under the ground. So if you think of pillars, a lot of pillars, what will happen? On that you can construct. That is what they're doing. Their question is, I am supplying from Chennai. Should I get it registered in all other states? My question to them is, I have 2 questions to be answered in this. One is place of supply. See, there is some concept called place of supply in GST law. All of you know that section 10, section 11, section 13, section 13, section 13, 10, 11, 12, 13 of the IGST Act deals with the place of supply. Let me tell you, make it very, very clearly. Place of supply has nothing to do with registration. Let me make it very clear to this, because many people are getting confused that if my place of supply is in Delhi, I have to get it registered. They're absolutely wrong. Place of supply has nothing to do with registration. What do you mean by place of supply? All of you would have heard the concept called consumption-based tax. Let me tell you, I have not seen this word called consumption-based tax in anywhere in the GST law. From section 1 to 174, you cannot find this guy called consumption-based tax. The guy is missing. Everybody is talking about it, but that concept is incorporated by way of place of supply. That means supply where the service is consumed. So it is only for consumption-based tax the concept called the place of supply is introduced. That doesn't mean that that is the fundamental criteria for registration. Where you are supplying the service is important. Where it is consumed is not important. So they said, okay, I will do it from here, Chennai, and Kochi Metro is in Kerala. And because there is a place of supply provision, place of supply is in immovable property, section 12, subsection 1 of the CGST Act, section 12, subsection 3 of the IGST Act says that place of supply shall be Cochin. Now, question is, should they get it registered in Kerala? I said not required. If you look at from the law perspective, I am supplying from Chennai and the place of supply is in Cochin, then I will bill it to the party IGST. That's all. That's all. But there's a practical issue that company is maintaining 20 registrations. Why? Theoretically, as per GST law, it is not required. But practically, what will happen? Say, for example, I am engaging CA Mr. Ranjit Warrior. And I'm asking him, say, for example, he is dealing in steels. Our chairman assuming that he is having another business of dealing in steel. And when he is dealing in steel, or assuming that I'm engaging another party also, called interior, a construction civil engineer, who is drawing, who is doing all these drawings, etc. So what will happen is all these people will, raise invoice on me considering the place of supply as Cochin. So what will happen? The tax will go to Kerala, where I don't have a registration, but I am billing from Chennai, where I don't have an input tax credit. This is a big issue, big issue. So based on the commercial decision, we decided that we will get it registered in all 20 states. So on practically, so let me tell you, all construction companies need not get it registered in all the states, but practically speaking, if they want to run the business viably, then they have to get it registered in all the other states, only from input tax credit perspective. Now let me tell you, let me come to some individual registration, individuals. I'm leaving corporates and I'm taking into individuals. Say for example, all of you are having, think of your own situation. You are having a commercial rental income. So you are having some small shops or some, malls, and you are getting a rental income of 16 lakh. And your interest income is 8 lakhs. See, first thing you have to identify whether it is a supply of service, supply of goods. Obviously, it is a supply of service. What is the limit? 20 lakhs. For the 20 lakhs, should I consider exempted supply? Yes. So here it is 16 lakh, which is a taxable supply. Fixed deposit 8 lakhs, you are liable to get it registered. Now, I have one more question. If it is not a commercial rental building, say for example, you are having 2 apartments. Each apartment is generating 8 lakh rupees. So 16 lakh is the total revenue which you generated out of flat let out, which is let out to a residential purpose. Some families are staying there, which is an exempted supply under notification number 12/2017, and FD is also exempted. So 16 plus 8, 24, but still not required to be registered because both are exempted supply. Both are exempted supply, or one is exempted and one is reverse charge mechanism. No need to get it registered. But if there is any taxable element, even if it is for 1 rupee comes, you are liable to get it registered. Now, another practical example which all of you are facing, or all of you will be having, is now it is very popular also because the FD interest rates are all coming down. Everybody is going and investing in share market. Now in share market, I'm buying Reliance shares today and selling tomorrow. Will it be considered as a supply? No. Reason being, to consider it as a supply of goods or supply of services, first it should be a goods or service. If you go to section 2, subsection 52 of the CGST law, CGST Act, where the goods definition says that all kinds of movable properties, excluding the shares, etc., etc. In services also, they are very clearly defining. Anything other than goods is service, but excluding securities. So securities is not considered as a goods, or neither considered as a goods nor considered as a service. So there is no question of supply at all. Dividend is also not taxable because dividend is called actionable claim. Dividend is called actionable claim. What do you mean by actionable claim? Actionable claim means it is a right over a debt. Unless otherwise they declare it, you will not get the dividend. You have no right. Say tomorrow you cannot go and then ask Reliance if they don't declare dividend. You cannot go and ask, hey Reliance, you have to pay me dividend. You have no right for it. Once they declare the dividend, then you will get it. It is their prerogative. So dividend income and are not considered, are actually actionable claims, are actually neither supply of goods nor supply of services as per Schedule 3 of the CGST Act 2017. Only one actionable claim is taxable, that is lottery. Kerala is very famous for lottery. Lottery is taxable because they deliberately wanted to exclude the lottery out of the definition of actionable claim so that they can tax lottery. So I have one more question, which with respect to more of kind of a theoretical perspective, but your students may ask it, because some of my students ask me, those who are doing training in our organization when we were handling this topic for academic purpose. Since you are all, if it is a professional, I mean, thing, obviously this point is something which you have to keep an eye on it. Say, for example, what is the turnover which we are talking about? Say, for example, I have turnover from Tamil Nadu, 10 lakhs. I have turnover in Chennai, Kerala, 20 lakhs or 18 lakhs. Am I liable to get it registered? Yes, absolutely yes, because the turnover which they are referring is the aggregate turnover, everything included under the same PAN, because all of you are identified with a single PAN. I have a PAN, whatever I earn, it is linked to that PAN. If my wife is earning, it is linked to that PAN. So it is PAN based turnover. So whether you are in Jammu and Kashmir, whether you are in Chennai, whether you are in Kerala, doesn't matter. So whether my aggregate turnover exceeds 20 lakhs or 40 lakhs, as the case may be, something which you have to see. Now I have an interesting question. The special category state, say for example, I have an office in Manipur. In Manipur, my turnover is 11 lakhs. Manipur, my turnover is 11 lakhs. But in Kerala, my turnover is only 1 lakh. Am I liable to get it registered? It is not crossing 20 lakhs. But if you look at the special category states, Mizoram, Manipur, Nagaland, and Tripura, it is only 10 lakhs. So because when I'm looking from Tripura's or Manipur's side, my turnover crossed 10 lakhs. So I'm liable to get it registered in Manipur as well as in Kerala. Once I get it registered there, I'm liable to get it registered everywhere if I'm providing supply of service. I'll repeat, this is little interesting thing. If I am liable to get it registered in Manipur, because it is only 11 lakhs is my turnover, because their limit is only 10 lakhs, I'm liable. And in Kerala, I have turnover of only 2 lakhs or 3 lakhs, but still I am liable to get it registered in Kerala. Very, very interesting thing. Now we will take a couple of practical issues. We will take a couple of practical issues. I hope that all of you are understanding it. I presume that. So I'm going into some practical issues so that you will get a little more insight to what we are talking about. So we have a global legal firm as a client in Delhi. They are actually doing turnover of 100 crores. I'm not exaggerating, it is actual number. They are actually doing 100 crores turnover. And it is actually a global legal firm. So they are coming under, because they are having more than 50 crore turnover, they are doing e-invoicing, all these things, they are complying. But their question to me was, because why they are registered is because it's a legal firm, their outward supplies are all not taxable, because either they will provide supply to corporate, where corporate will reverse pay tax on reverse charge mechanism, or they will provide supply to an individual, which is exempted under 12/2017 notification. Then why did they obtain registration? That is a crux, because they were actually importing some service from an advocate located outside India. Say for example, they have some issues in arbitration, say they are in Singapore, so they will take the advice of some advocates in US, Singapore, so something like that. So they will make the payment to them. So that comes under reverse charge mechanism. Import of service is also coming under reverse charge mechanism. Because of that, they are compulsorily required to get it registered. I told you in 22, we are saying who are all liable to get it registered. 23, we said who are all not liable to get it registered, that exclusively exempted, and where government is notification is issued, then not required, only one notification issued, 10/2018. So after that, there is a section called 24. 24 says that I don't mind whatever happens in 22 and 23. I don't even consider that. 20, you come to me first, 24, section 24, and see whether your proposed transactions are listed in 24. If it is there, it is a compulsory registration, even if you are doing 1 rupee turnover. So here the case is, they were coming under reverse charge mechanism because of section 24, this global legal firm is supposed to be registered. Now their question to me is, we are not paying any tax. Should I file my returns? Should I get it audited under the GST law? Should I file annual returns? Should I raise e-invoice? I said, sir, once you get it registered under the law, whatever it may be the reason, 22, 23, 24 sections, anything which is applicable to you, once you register, all provisions will be applicable as if you have registered under the GST law. So there is nothing called once you register, you need not pay tax, or you need not pay, file returns. No exemptions is available. Once either you close your registration number, stay out of the circle, or you come inside the circle and comply everything. So we have advised them, no, nothing can be done. Either you stop your import or service. Would you be able to do that? Then we need not get it registered. They said that is not possible. Then we said this is also not possible. Now we will come to the second practical issue. Now GST registration. GST registration is cancelled due to non-updation of bank account. This is very, very practical. If you are doing actually GST registration, you will come to know that at the time of GST registration, you can see a circular here actually. If you open a company, incorporate a company and then go to a bank saying that bank, I need to open a bank account. Bank will ask, give me your GST registration. If you go to GST registration is asking, give me your bank account first. It will never happen. If you go to GST is asking bank account. If you go to bank is asking GST. So GST department said, no problem. You get it registered, you open bank account, come back and update within 45 days. See what happened is, they did, if you don't update within 45 days, they will issue a shock cause notice asking why we should not cancel your registration. They will send it through email. Some people will miss it. Some of the clients will miss it. Suddenly they will not reply. Suddenly they will cancel the registration. It's happened to some of our clients. And now the case is in appeal. Now we have to go for appeal because that revocation time, everything is over. Once they cancel, within 30 days, 30 days, I can apply for a revocation of cancellation with a continuation up to 3 months. Now all periods are over, then they will cancel it. Then you have to go for an appeal against the cancellation order. So what will happen if I cancel the registry? If they cancel my registration, I will not be able to do business. Practically, I will not be able to do business. How do I do business without having GST registration number? So next is, now one more point. Now one more point on the same scenario, we have explored whether we can apply for a new registration number. Already one is there, they cancelled it. Now can I go for a new registration number? Two practical issues. One is whatever input tax credit lying in the old registration number cannot be carried forwarded to the new one because there is a monetary loss to me. When I'm applying for a new registration, they are asking why it is cancelled, why the first one is cancelled. So it is getting delayed. So we are exploring both. Some cases we are genuinely getting, even after applying the second registration, we are getting the registration. We told we genuinely closed it and now nothing is there, nothing was there, we didn't have a business. Now we are not, we wanted to, now we got some orders, we wanted to get our registration back. So then that kind of cases, they are allowing that. Now, death of a proprietor. So one more thing, I think this is one real case which I handled in Trivandrum. See what happened is one of our clients, the same construction company, they had some construction site was there in Technopark. Okay, there was a new project which was going on. So our company's goods were sent to, after this Kochi Metro project and all, they cancelled the registration because they didn't have further project in Kerala. And then after that, what happened? This Technopark project came, Trivandrum. The goods have moved from one, their Chennai yard to Trivandrum project because they need all the sophisticated technology or machines to come to their project in order to start their projects. So it came to the project. On the way, the department officials stopped, detained the goods. We are talking about this concept in e-way bill. detained the goods and asked, where are you taking the goods? They said, we are taking into Trivandrum Technopark. So the officer is asking, do you have a registration there? He said, no, we are going to get it. So because what happens is that GST is handled by one group of people in the company and the project is handled by another set of people. So this another set of people will say that, these are the project schedule, you have to send it. They will be sending without informing this, finance team. Finance team will come to know that there is an issue only after the goods are being caught. And then they will get a call. Then they will say that we will get it registered now. So these kind of issues are there. So what my point here is, before moving the goods, you have to get it registered. Otherwise, you will have issues like detention of goods on the way. Now, there is a death of a proprietor. So for example, a proprietor has passed away. What is the procedure? A proprietor is passed away. What is the procedure? A partner is passed away. I have a classic case for the point number 4. One proprietor passed away due to COVID. One partner passed away. Father and son, they are the partners. Father passed away due to COVID. Both have happened in the last 2 months back in Chennai. So how do we treat it? Now they are having huge input tax credit lying in their proprietor account. Proprietor passed away. Now who can file the returns? So then there is a circular being issued under 96/2019, where they said once proprietor is passed away, the legal heir can get it registered in the portal. For that, you have to approach the officer, register him as an authorized signatory. Then he can file all the forms required to be filed. And after filing that, it can be either closed, or if somebody is taking over, in our case, the business was taken over by another person. And at that time, it will be considered as a transfer of business under section 18 subsection 3 of the CGST Act, where the input tax credit lying in the deceased person can be transferred to the new person by filing a form called ITC 02. There is a form called ITC 02. So one account to another account, the ITC can be transferred and ITC will come to the new person. While registering the new person, you have to mention that the reason for registration is death of a proprietor. If it is already registered, no problem, you can file it and get it. So there should be an underlying agreement also for purchase of this business, and business should continue as it is. So these are all the conditions which are prescribed in this section 18.3, read with rule 41 and read with circular 96/2019. You can go through it and you can understand in a better sense, because these are very, very practical scenarios. It's not a theoretical one, because we are handling it. 2 cases are happening in our office right now. One is that is why if you see the circular number 96/2019, you can see a beauty. It is only talking about proprietor. It doesn't talk about partner. But for partner disease, there is no circular or clarification. So we are actually applying this circular, which is issued for proprietor. We are using it. One partner is passed away means the partnership is dissolved automatically. There is nothing called partnership firm with one person. So there are some practical issues involved in it. Now, another case is going on with us is this company is actually located in Haryana. They have a GST department. They had projects in Telangana, Andhra Pradesh, Tamil Nadu. And this guy being from North, he doesn't know the difference between, they've all called North, South Indians as Madrasis. And they call Madrasis, and then the officer asked him to close the registration number. This is a practical scenario happened. Asked him to close Telangana's registration because there was no project. This guy thinking that Telangana is also Madras, and he cancelled Tamil Nadu. It's literally happened. He cancelled coolly and he kept quiet. He closed it, informed his boss that I closed it, registration is cancelled. And this has gone to the officer. Officer also cancelled it. He also cancelled it. Okay, application CO Moto, they cancelled it. He also looked at all the papers. He cancelled it without issuing a shockers notice. No problem. After 4 months, now they are waking up suddenly when there is a project, when they try to log in. Tamil Nadu is active and Telangana, Tamil Nadu is closed and Telangana is active. Now they're asking what is to be done. So the only solution here is time is elapsed for revocation, everything. They have to go for appeal, and apparently they have to pursue one more registration. And Is registered person supposed to file any other forms after cancellation of GST registration? Yes. This is a bigger blunder which many of the professionals will do, because what happens is under normal registration cancellation, it is merely once you cancel, your responsibility is over. But here there is something called filing and final return. Within 90 days from the cancellation, you have to file a form called final return, FINAL return, under section 45 of the CGST Act, form GSTR 10. This has to be filed, else you will have a penalty. So there are non-filing of GSTR 3B. Nowadays, department is cancelling your registration. Suo motu, they are cancelling. So now we have discussed about person who are liable to get it registered, and we talked about the threshold limit. We talked about aggregate turnover. We talked about who are liable to get it registered, and we talked about persons not liable for registration. You can see the screen now. See 23(1)(a) talks about exclusively in the business of supply of services, not liable. Agriculturist is there, not liable, and by notification. This notification is something which I was referring to the 10/2000 notification. Now we will come to the last one, compulsory registration. Now we have also talked about the cancellation of registration. I'll give you some more points, quick points on amendment. There is nothing called big I-funda. Amendment, when you are applying for registration amendment, there is two concepts. One is key area, non-key area. Key area means you have to, that will be processed through the officer, and it will be taken on record. If it is a non-key area, automatically approved. Okay, so one director is changed, automatic approval. So one bank account to be updated, automatic approval. Key area, registered office change, key area, approval required. Now, compulsory registration required in following cases. Compulsory registration under section 24. Casual taxable person making taxable supply. RCM, this is the point I was referring to, that global firm. First point I missed it. Interstate supply of goods or services. If you are sitting in Kerala and then supplying goods to Tamil Nadu, even if it is a 1 rupee goods, you are liable to get it registered. Subject to 10/2017 notification. What is that notification? It says for supply of service alone, don't worry. Service alone, I don't mind. No need to get it registered. So, meaning thereby, if I am a businessman who is doing supply of goods from Kerala to Tamil Nadu worth of 10 rupee, I am liable to get it registered, because compulsory registration is coming into the picture. Now, you look at the starting word which they have used, notwithstanding anything contained in 22(1). So they are saying that keep your 22 and all away. I'm not even going to consider it. And so interstate supply mandatory registration in terms of goods, supply of service, no problem. 20 lakhs limit will be applicable. Casual taxable person making taxable supply. I can explain you what is casual taxable person, but because of pause of time, I'm just moving. Person liable to person who are required to pay tax under reverse charge mechanism. All of you have seen this. I've given you a global legal forms issue. Persons who are required to pay tax under 9(5). I have to tell you, I'll take 1 minute on this. There are 3 scenarios. One is being a supplier. I have to, when I am invoicing to a third party, my client, I am liable to pay. Section 9, subsection 1, 9, subsection 2. There are 5 subsections in 9. 9 is the levy. So when I am supplying to, when I am raising an invoice on my client, I am supposed to raise. And section 9, 1 and 2 says that you charge GST in your invoice. 9.3 and 9.4, they are saying that you raise an invoice, the recipient, your client will pay. So either the tax has to be paid by supplier or tax has to be paid by the recipient. There is a third scenario. I will be supplying to my client, but actually tax will be paid by somebody else. Can you even imagine that? I am supplying to you and I am the service provider, you are the service recipient, but tax will be paid by somebody else. Is that possible in GST? Yes. That is what I'm saying. Section 9, subsection 1 talks about my supplier being paying taxes. 9, subsection 3 and 4 talks about recipient paying. There's a section called 9, subsection 5. E-commerce operators. All of you would have taken at least once in your life Ola or Uber, or you have ordered Swiggy. Do you think that a hotel guy who is having only hardly 1 lakh turnover or 10 lakh turnover required to pay GST? But if you look at your Swiggy, you're actually paying GST. You take Swiggy, you take Ola, Uber, the driver, do you think that his turnover is 20 lakhs or more? No, never. He is not liable to get it registered. So supplier is that car driver, recipient is you being an individual, but tax will be collected by Uber and Ola at 5%. You look at your invoice, you can see 5% GST on it. Who is the supplier? Driver. His turnover, I'm sure that it will never cross 20 lakhs. Why should he charge me? Not required. So there is a third person who is collecting. So keep in mind 9, 1, 2, 3, 4, 5. You can understand that. NRTP making taxable supply. Non-resident taxable person. Definition will take some time. So I'm moving. Person who are required to deduct TDS under section 51. And the person who are making taxable supply, being an agent, you are liable to register. Input service distributor, you are liable to register. And TCS, tax collected at source under section 52, liable to register. E-commerce operator, liable to register. OIDAR, liable to register. OIDAR, it's online information and database access retrieval services. That itself is a big ocean. Nowadays, it's a very, very important topic. On another occasion, we will talk about it. And so that's about the registration part. And so I've covered the registration. There are other topics like cancellation, revocation. I already gave you that examples. So, but by and large, this is all about registration. So let me just move with the second topic. And if you have any doubts, we can park it at the end. If please note it down. To the extent I know, I will clarify. If I don't know, I will just go back and then clarify your doubts. So now let's move on to, because I'm running out of time. So I have to cover this. Now, Chairman, can you confirm whether you are able to see my screen? Chairman or Roy sir? Roy sir, can anybody?
Yes, we can see.
Yeah, okay. Yeah, thank you. So now we will move on to tax invoice. Okay, tax invoice and debit note and credit note. Very, very important topic. Very, very important topic. Very nice topic also. Very nice topic. What do you mean by an invoice? Very interesting definition. Invoice means a tax invoice referred to section 31. So when you're talking about tax invoice, you have to go to section 31. So without 31, you won't understand what is this invoice is all about. Now, before getting into our discussion, you have to actually understand what is this removal of goods is all about. Removal of goods is all about. Removal of goods means dispatch of the goods for delivery by the supplier, dispatching. Okay, or it can be a collection by the recipient. You can look at the nomenclature itself and understand the concept. Anyway, I'll be sharing the material also. You can go through. Now, when am I supposed to raise invoice? There are a couple of things. You think of an invoice. First, what is coming to your mind when you're talking about an invoice? When you're thinking about an invoice? The contents. What are all the contents should be there in an invoice? Law has prescribed as per rule 46. I'll repeat, rule 46 of the CGST rule 2017 as amended from time to time prescribes the contents in an invoice. Minimum contents. Previously, it was only 17 particulars. A, B, C, D up to Q. Now, there are 18 particulars. Only because of one. Because of recent change. There is something called invoice reference number. Because of e-invoicing. So, when we are talking, our discussion is on tax invoice, I would like to put it into two buckets. Bucket A, e-invoice. Bucket B, non-e-invoice. So what do you mean by what is mean by tax invoice? E-invoice See, in GST law, if you look at GST law is actually devolved or evolved over a period of time, and I'm sure that it will evolve over a period of time again and again. If you look at it, these concepts are all coming from other countries. Say, for example, Singapore, China, UK, all these countries have made it mandatory to raise GST invoices through their portal. Now what happened is, let me just tell you my experience on this limited experience. This frauds are happening in the country. You take newspaper, you can see that input tax credit fraud happened. 4,000 crore, 2,000 crore, 3,000 crore. So actually speaking, Intelligence Bureau was inquiring about this particular concept called how people are doing this economic offense. So economic offense wing of Intelligence Bureau has approached me to study the modus operandi implemented by these kind of people. So I was looking at the modus operandi. What are they doing? How they are doing it? So they will create a company. They will raise an invoice to B. B will raise an invoice to C. C will raise an invoice to D. And finally, all these A, B, C, D will vanish. And even if they get caught, they will be like some daily laborer or some Bihari who is actually doing some construction work here. By using his registration number, somebody would have done the fraud. You cannot collect anything from that pavam fellow. So government started losing the revenue. So we gave a modus operandi how they are doing it. They seriously took a note of it. From Chennai office, they sent it to Delhi IB office, and they seriously considered this modus operandi, and they brought a concept. There are different 2-3 methods they introduced in GST law based on the government IB recommendation. One is they restricted input tax credit. Point number one. Because in section rule 36, they restricted the input tax credit. And another way is you raise invoice through e-invoicing, introduce e-invoicing. E-invoicing means what? If I am raising an invoice in my tally or in my software, government will not come to know. Tomorrow, if I delete it, government will not come to know. But if I raise it through their portal, they will generate a unique code called invoice reference number, IRN. Once this IRN is generated, they got the track. It's something like you are going to the website of the government and raising the invoice from there. What will happen? They will have the record, right? You need not, even if your books are lost, it doesn't matter. They will have the records, complete records. It's a beautiful concept they introduced. So initially they said it is applicable only for people who are having more than 500 crore turnover. Then they reduced to 100. Now they are saying that 50 crore or more. If your turnover is 50 crore or more, you shall raise an invoice with invoice reference number. In their portal only, you have to go and raise it. So we have one bucket, e-invoicing, that is going to their portal and raise it. Non-e-invoicing. Okay, so non-e-invoicing means turnover below 50 crore, and then they are not generating this number called IRN. This is the only difference. So I talked about the contents. Contents are particular contents are mentioned in rule 46. Now, what are the types of invoices? E-invoice and non-invoices. Now, third question is when to raise an invoice? When should I raise an invoice? Now, quickly we will look into it. When we have to raise an invoice, look at this. Section 31 talking about when to raise an invoice. 31 says if it is a supply of goods, we are talking exclusively on goods, not services. If we are raising where there is a movement of goods, when there is a supply of goods where there is a movement of goods, then before removing the goods, you have to raise an invoice. If there is no movement of goods at the time or before delivery of goods or making it available, don't worry. I know that sometimes some people may not be able to understand this because of the wordings which is used. Most of you would have understood what I'm talking about, but still I will give you an example. See, for example, I am selling my mobile. I am selling my mobile, or I am going to say MyG showroom. I'm going to MyG showroom and I'm going there and then I am buying this mobile. So this mobile will move along with me. I will go to showroom, I will buy it, this mobile will move along with me. So in such cases, when there is a movement of goods, where there is a removal of goods, then GST has to be charged, invoice has to be raised before movement of goods. Before removal of goods from MyG showroom, they should have raised invoice. Otherwise, I'm not supposed to go out of the showroom without having the GST registration number, without GST invoice. Now, making it available. Say, for example, I have a generator in Technopark, Trivandrum. I have a generator. I'm an owner of Technopark. I'm an owner of generator in Technopark. That is a big generator, not the small one. And I'm getting a rental income of 1 lakh per month. And I felt that, no more, I cannot do the maintenance, etc., etc. I am selling to Mr. Rajeev Warrior. He being in Cochin, he said, I will take care of it. You sell it to me. So I'm selling to him for, say, 20 lakhs. I'm selling to Ranjit Warrior at 20 lakhs. Now, Ranjit Warrior is buying that generator with an expectation that he can get 1 lakh revenue from Technopark. So the agreement has to be changed from me to Ranjit Warrior because he becomes the owner of the goods. But there is no movement of goods. This goods is still there in Technopark, same premise, same place. So in such cases, the invoice I have to raise invoice to Mr. Ranjit Warrior before or at the time of delivery of goods or making it available to him. Now, I just saw one query here. Is it something to do with the time of supply? It has nothing to do with the time of supply. Time of supply has been explained in section 12 and 13 of the CGST Act. Section 12 and 13 of the CGST Act. 13 is for goods, 12 for goods and 13 for service. Time of supply is talking about when you are liable to pay tax. When you are liable to pay tax. They're not talking about when you have supposed to raise an invoice. But yes, your question is very well valid because sometime in time of supply they are saying they are correlating with the section 31. Section 31 is saying that time of supply arises whenever you are supposed to raise invoice as per section 31. So time of supply is different. Section 31 invoice is different. But time of supply section, if you go to section 12 and 13, they are giving a reference to section 31. Because of that, both are interlinked to some extent. Okay, now let me go to section 31 subsection 2 on supply of services. If you provide a supply of service, when you are supposed to raise an invoice, see if they put it into 3 categories. Though you can see only 2 there, 3 categories and 2 industries. If you're an insurance company, banking company, financial institution, including NBFC, non-banking financial corporations, then within 45 days, you have to raise an invoice. After or before, any time before completion of service, you look at any definition here. When to raise an invoice, because the moment you raise an invoice, they will get revenue department. So assuming that you're selling the goods today and had you raised invoice 1 year before, government doesn't have any problem at all because they're getting advance money. They don't have any problem. So they're cleverly using anytime before, I'm okay with it. Anytime removal, after removal, you're not supposed to. After completion of service, I will give you time limit within which you have to raise an invoice. So banking companies, insurance company, NBFC and all, they're saying within 45 days you have to raise. But they are saying that if it is a quarterly basis, you can also raise invoice. What is quarterly basis? That is applicable only for distinct person. Say, for example, all of you know that if you go to your Cochin branch for State Bank of India or Cochin branch of HDFC Bank or Cochin branch of Federal Bank, you will not get international, the foreign exchange services there. you will get it, but actually the bank is coordinating with their Mumbai office, because Forex would be centralized in one particular place called Mumbai, most of the banks. Now that bank, actually this Cochin branch is actually taking services from Mumbai branch. Mumbai branch will raise an invoice on Cochin branch. This thing we don't know, but actually it is happening inside them. So in Cochin, the Mumbai branch is liable to raise an invoice on the same person, same branch office. They can raise it in as soon as they record the transaction books of accounts, or maximum by end of the quarter, because ultimately it is happening within the same PAN. It is within the same PAN. Distinct persons will always be within the same PAN. Same PAN, different branches. That's all. Distinct person means not different person. It's same persons within the same PAN number. There are a lot of registrations with different branches, you can call it as. Forget about it. So this is the two options which you are having. Now comes the major 99.99% bucket. People like us, within 30 days of completion of service, you have to raise. So for example, being a chartered accountant, I'm signing a balance sheet of a company, say for example, Samsung Electronics India Private Limited. When I'm signing their balance sheet, I completed my service in all ways. When I signed the audit report, I completed the service. Within 30 days from that balance sheet date, I'm supposed to raise an invoice. But how do you determine the completion of service is a very, very litigative one. I'll tell you. See, we are representing cases in tribunal, high courts, etc., etc. So that being the case, we have a fee collection. The case will take a lot of time. So the fees collection would be based on stages. So first stage will be, drafting the appeals and then filing the appeals. Second would be first hearing, then subsequent hearings, and then you will get an order, and then you have to give effect to that order. So all these things are considered as a different stage. In each stage, how do you determine that is a completion of service? So completion of service is a more of factual in nature. You have to actually look into the underlying agreement. If there is no clarity, you have to go to the underlying agreement. We have a beautiful case in supply of service issues. I mean, if I get another opportunity, I will share that beautiful case, because it is coming again like a circular thing. Like as I said few minutes back, the bank versus GST department. When you go to bank and asking for number, they're saying that get GST registration. When you go to GST registration, they're saying that this. We have a classic case in a construction company where time of supply, when to raise an invoice, when we win, they are saying that whenever it is being collected, money has been collected. When the money will be collected? After raising an invoice. So there is a circular trading happening in one of our clients' construction company case, which is a very beautiful one, but you need a lot of time to understand it. So I'm not getting into it, but I'll tell you that is actually coming here. You can see continuous supply of goods and continuous supply of service, which is actually require a little more time to understand. That is the place where I wanted to take it in a manner with a practical example so that you will understand it, but that will actually consume a lot of time. So I'm not taking it today. But on another occasion, definitely we can explain it in detailed manner. Now, 31.3 talks about revised invoice. What do you mean by revised invoice? An invoice, see in GST law, you can only one particular place only you can raise a revised invoice. Say for example, today or 1st of August 2021, I crossed my threshold limit of 20 lakhs, and now I have to go for a registration. Immediately on 2nd or 3rd of August, I applied, and today I got the registration number. So today is 13th, and from 1st of August till 13th, I would have done my business. I cannot wait for this registration number to come. So at that time, the law says after getting the registration, go back to 30 days before. 30 days before the registration, whatever invoices you did it after liable to get it registered, that after 1st of August, that day out only I crossed the 20 lakhs. From 1st of August till today, whatever invoices I issued, I can revise it. This is the law says. This is the only place where you're supposed to revise it. I've seen in industry, people are revising left, right, center. Sir, there is a mistake, so I'm revising it. No, you're not supposed to do it because there is no way you can revise it. So next is 31.3. They're saying that if the invoice value is less than 200, no invoice is required with some conditions. They said unless otherwise the other party is registered, he wanted to have a invoice and with certain condition. But generally less than 200 rupees, no invoice is required. 31(3)(c), exempted supply or composition scheme under section 10 of the CGST Act. In both the cases, you are not supposed to issue a tax invoice. You should issue a bill of supply. That you have to go to tax invoice we discussed in rule 46. Bill of supply is there in section rule 49. Please make a note of it. Receipt voucher. Say for example, if I'm doing a business, being a chartered accountant, they are saying that, okay, sir, I will give you advance. My professional colleagues here will laugh if I say this example because client will generally not give any advance. But in case of litigations and all, once the problems comes, they will give the advance. They don't worry about it. But audit and all, they don't generally give advance. But if at all I receive an advance, then I'm supposed to issue a document called a receipt voucher as per rule 50. Now comes refund voucher. Assuming that I took up the assignment, due to some reason I'm not doing it, so I'm giving that money back. At that time, I have to create a refund voucher. These are all documentation required under GST law. 31(3)(f) talks about RCM invoice. Say, for example, if I am dealing with an advocate, I'm a business entity, and an advocate is providing me some service, being a business entity, assuming that there are two scenarios. One is advocate is not registered because he is not required to be. Then I am liable to create a GST invoice under GST law. Scenario number 2, in my previous example, that global legal firm, they already registered. They are issuing me an invoice. I need not issue a GST invoice because already under GST law, there is an invoice already. The unregistered advocate who is providing supply of service to me, at that time, he's not registered. He's not issuing any GST document. So thumb rule is one GST document invoice is mandatory either by supplier or by the recipient. So in case global law firm is providing service to me, I need not raise an invoice because he already registered. He is giving me some GST registration invoice. Now, last one is payment voucher. When I am making payment to that RCM supply, say for example, advocate, I am supposed to maintain a document called payment voucher. So with that, section 31 is over. Continuous supply of service, I'm not handling it right now because of course of time. And now there are some more concepts with respect to supply of, I mean, when the invoice is supposed to be raised, there are some cases where you will send the goods on approval basis. See, I will send, say for example, you take the line sales, right? Say for example, I am HUL, say for example, Hindustan UD Limited. How do my business happens? I have a executive in Cochin. That executive will go to each shops, each supermarkets, and will take the stock of it. Hey, how many toothpaste you require, how many Kisan Jam you require, all this he noted. Then his delivery people will go. That is only an expected demand. Now sale will not happen before the movement of goods because even we don't know whether guys like the supermarkets, Bismi, say for example, there is a Bismi I saw on the road. So that Bismi supermarket won't give the supply. That sale will not complete unless otherwise the goods have taken from the warehouse and go to Bismi, and then Bismi will take the goods and then they will make the sales. It's called line sales. So in such cases, if there is any line sale or any other thing, you have to raise invoice within 6 months. You have to raise invoice on within 6 months. So this is all about section 31, and we have section rule 46. Please go through it. And now there is a requirement under the invoice GST law to mention HSN code or SAC code. Previously, it was like up to 1.5 crore, no HSN or SAC required. 1.5 crore to 5 crore, 2 digit, more than 5 crore, 4 digit. Now, with effect from 1st April 2021, very recent one, we are supposed to mention up to 5 crore, 4 digits, and more than 5 crore, 6 digits supposed to be mentioned. Now you have all these rules, everything I summarized it. You can go through it. And now credit note and debit note, very beautiful topic. Looks like a very small Mini Cooper kind of a topic, very small but very powerful actually. And credit note, what I mean by credit note? See, I raised an invoice and I have a credit note. Now I have to raise a credit note. See, there are only 3 situations which are prescribed under the GST law where you can raise a credit note. One is I raised an invoice for 1 lakh and the taxable value or tax charged in the tax invoice is found to exceed. See, instead of 10,000, my employee has put 1 lakh. Okay, instead of 10,000, my employee has put 1 Zyber extra. Now we found it, no, it is only 10,000, it is not 1 lakh. I can raise a credit note. Scenario number 2, when goods are supplied or returned, I supplied the goods. Say, for example, you take a pharma industry. I supplied the goods. They returned it, saying that no, this doesn't have a quality. This is an expired product. You can raise a credit note. Who can raise a credit note is a very, very important point. I will tell you that. Now, third point is, I am sending some medicines to the distributor, wholesaler. I am a Sun Pharma company. I'm sending goods to the distributor. Distributor ordered for 100 quantity, but he received only 98 quantity. So there is a deficiency of 2 quantity. Now he can raise who can raise? Supplier only can raise a credit note. Please understand, make it a thumb rule in your heart. Only supplier can raise a credit note. GST credit note. What do you mean by GST credit note? My dear friends, actually there are 2 credit notes. GST credit note and commercial credit note. Commercial credit note, it is also called financial credit note. There are 2 credit notes. You have to understand this, otherwise you will get confused. One is GST credit note, one is commercial credit note or financial credit note. Let's understand what it is. So before that, you have to understand the time limit. Then only you will understand what is the difference between these other 2. If the supplier has to raise a credit note, it has to be raised within the September month following the end of the financial year in which supply was made, or date of furnishing annual return, whichever is earlier. Forget about all those things. I will give you a practical example. Say, for example, the Sun Pharma supplied to me in March 2021. The supply pertains to which financial year? 2021. Agreed. April to March, everybody knows. Now the government says you can raise a credit note only by September 2021. After September, you are not supposed to raise a credit note under GST law. So the credit note has to be raised by September. You think of Sun Pharma. Huh? Sun Pharma is supplying the goods. All drugs, all medicines will have an expiry of 2 to 3 years. Practical example, 2 to 3 years. So they cannot raise a GST credit note within September. Then what will they do? How do they take the goods back? There is a circular issue in this regarding 72/2018, where they said, where they introduced this concept. Already it is there. Commercial credit note can be raised. Commercial credit note means it will never come to GST law. GST returns, it will never declare in GST return, never declare it in GST law. Anybody can raise also. Even supplier, Sun Pharma can raise, even recipient also can raise. But GST credit note can be raised only by the supplier. Commercial credit note or commercial financial credit note can be raised by any Tom, Dick and Harry. Though I am exaggerating, it is only recipient can raise a credit note. So that you have to keep it in mind. So anything which is within the what is GST credit note? Credit note where you can reverse the credit GST component. Why they put September as last date? Why they cannot keep it 2 years? Many people are asking. I'll tell you the reason, logic behind it. All of you know that the Kerala state is asking for the GST, their compensation. So all these compensation, everything has to be done based on one cutoff date. That is the cutoff date is September 2021. Every September they will close their accounts. And then they will decide what is the amount to be paid to each states. though that is the logic, it will never reflect in any of this law. So you can raise a credit note, and there's a time limit for raising a credit note. And last one is debit note. Say, for example, I raised 10,000 instead of raising 1 lakh. Subsequently, I found that the credit notice, sorry, the invoice is short of 90,000. I can subsequently raise a debit note. With that, I will complete it. Whenever I'm raising a debit note or credit note, whenever there is a debit note, definitely it should be attached with the GST only. Okay, GST should be there if it is a taxable supply. If there is a credit note or debit note, the same should be disclosed in GSTR1 of the respective months. So this is all about debit note, invoice, and credit note. We will quickly go to our e-way bill. I know that I'm going little faster, but as I said, otherwise I will not be able to cover the entire topic. Yeah. So we will talk about Roy sir. Am I audible? I just wanted to check.
Yes, it's audible.
Yeah, thank you, sir. Because I'm just taking a new slide, so I just wanted to confirm. Okay, fine. So we will go to e-way bill. Very, very interesting topic. Once again, let me tell you, very, very interesting topic. I'm not exaggerating. Because Kerala is notorious for this particular topic. Be proud of it. Kerala, because you will get a lot of exposure once these cases are going up. Kerala, Uttar Pradesh, 2 states notorious for this. Why I'm saying notorious? They are implementing the law, I agree, but in number of cases in the Kerala High Court and then Uttar Pradesh High Court, where plenty of cases, 80% of the cases are from these 2 states. Majority of the cases on e-way bill are from this state. Plenty of writ petitions under Article 226 of the Constitution, writ petition left to right to center. I think advocates from Kerala are making a lot of money because of this, with the due respect to them. So, disclaimer, we will go to the e-way bill. So again, e-way bill, let me just tell you the structure of e-way bill. Why this e-way bill is required? What are they trying to do with this e-way bill? See, the entire gamut or the provision lies here. The origin of e-way bill comes from section 68 of the CGST Act 2017. Read with the rule 138, 138A, B, C, D, E. Don't worry about it, only one rule. And coming with the 138, 138A, B, C, D, E. Like, you can, the children's, starting with alphabets A, B, C, D, E. So, but easy to remember, 138 rule is the only rule for e-way bill, but very dangerous rule also. So we will see one by one. There are a lot of relevant notifications, relevant circulars. I have summarized everything for your benefit. Quick reference here. And due to COVID, there are some change which is applicable. This was actually, this slide is more important during the 2020 when I was making a presentation to Hubli branch. So at that time I brought this slide, but now it is not very relevant. Now let's understand what is this GST enforcement team does. Basically, this this e-way bill section can be handled in 2 ways. One is understanding e-way bill from the starting. What is e-way bill? How does it work? Etc. 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 Or coming from the backside. What is actually happening in the e-way bill? So, being all of you being a profession, professors and then knowledgeable people, I will go from the backside so that you will understand exactly what is happening in this. Why this e-way bill is important? Because when you're traveling from basics to the extreme to the practical side, I will bring practice into this so that the concept would be a very, very understandable one, very, very interesting one. So you can see the policeman, people standing there and then keeping a gun on him. So basically, enforcement directors, the intelligence officers are handling this concept called e-way bill. They are the people who are stopping the vehicle on the road. You can see a lot of vehicles are being stopped in checkposts, etc., especially Walayar checkpost. But because of GST introduction, Walayar checkpost has been removed. Now, previously, when you are traveling from Chennai to Palakkad to Cochin, when I used to drive, and then you can see a big traffic in in Palakkad. But nowadays there is no big traffic. You can still see vehicles. That is not because of GST, but because of things. One is GST is there. Second is they are also looking at illegal, drugs, transportation, etc., etc. But now the objective of e-way bill is, once e-way bill is raised in any part of the country, it is valid across the country. Now, so let's understand, before getting into the concept called e-way bill. E-way bill is nothing but, first let me just give you a brief intro of what is e-way bill. See, e-way bill is only a supplementary document for transportation of goods. Many people are having a misconception that e-way bill is important. No, e-way bill is only secondary document. What is your primary document? Invoice, tax invoice, or bill of supply. Tax invoice as mentioned in rule 46, or bill of supply as mentioned in rule 49, or delivery challan as mentioned in rule 55. These three are the primary documents. E-way bill is a secondary document which is mandatory. If there is a supply of taxable goods, tax invoice primary. If there is a supply of exempted goods, bill of supply primary. And when it is not a supply at all, I'm just moving from one branch to another branch within the state, not a supply, then delivery challan. So then comes e-way bill. What do you mean by e-way bill? E-way bill is nothing but the entire country has to track the movement of goods. That is objective. That is objective, whether actually there is a movement of goods or not. And so there is a concept called e-way bill which is introduced so that the government can track where the goods are moving, what is actually happening, etc. Now, when the goods are moving with this document, intelligence officers will stop the goods and verify. They have the right to inspect the vehicle. They have the right to inspect the goods. Let me repeat. They have the right to inspect the vehicle, and they have the right to inspect the goods being transported. So when they are inspecting these documents, if they find any deficiency, they will issue notice. They will issue notice. So then notice, once they issued it, the client has to respond, and there are some procedures. I'm just going to quickly take you through that. Before understanding that, you have to understand what do you mean by detention, seizure, and confiscation. Detention means if the goods are moving from Coimbatore to Cochin, and in Walayar checkpost, the officer is saying, no, stop. This is called detention. I have not taken the possession of the goods. I have not taken the possession of the vehicle. Still, whoever is the driver, he is the conveyance in charge. I just detained it, that's all. When it comes to seizure, I will take the possession. The government will take the possession. Once I find that there are some illegal goods or they didn't pay the taxes, I will issue a notice, I will issue an order, I will confiscate. When I'll seize the goods. Once the goods are seized, the ownership, the possession, not the ownership, possession moves from the lorry in charge or the driver to the government. And once it is confiscated after issuing notices, and it is found that it is an illegal goods or there is no tax paid, the government can confiscate. When they are confiscating, the ownership is transferring. See, you understand. For example, I am coming in my car with a product, a laptop, without paying taxes. If the department is stopping me, it is only they're detaining me. Ownership is with me. Ownership is with me. Possession is also with me. Once they seize the laptop, the possession will go to the department, but the ownership is still with me. But after issuing notices, they find that there is a fraud in it. The ownership will also go to the department. What is the beauty of it? When there is a possession, department cannot sell the goods. When the seizure, the department cannot sell the goods. Confiscation, they can sell the goods because ownership is already transferred to the department. Now let's understand what e-way-bill, what is the proceedings? Because I will quickly, I just summarized the proceedings. See, once I'm coming in my car, they're stopping me, they will issue something called MOV01. Okay, that is a statement of honor. MOV02, practicing chartered accountants, practicing people will know MOV02 is a very, very important notice. The moment you get MOV02, run to the office, ensure that you are releasing the goods. Because that is the detention stage. You can see before detention, section 129, you can see on the top. Go to run to the office and get it released. If you don't get it released, then there are, you know, if you go and then represent properly, you will get the releasing order in MOV05. And detention comes. You know, this was before detention. Now this slide is after detention. Once they detain the goods, they will pass an order under MOV06 and MOV07 is a notice. Once they detain, order of detention is there, then the notice will be issued, and once it is issued, you have to run to the department for releasing the goods. I had to go to Trivandrum for releasing one of my clients' machinery because that machine, without that machine, that project will not take off. I had to come from Chennai to Trivandrum to release the goods. It's called Neyatinkara, you know, office jurisdiction. And we had to go there and then release the goods. Order of demand, they will issue a demand. The only way to release the goods is give a bank guarantee or file a writ petition. High Court will still say give a bank guarantee and release the goods. Confiscation, this is the ownership will move, taken away from you. So that will be assessed in MOV10 and MOV11. So this is e-way-bill, e-way-bill 01. I'm talking only about e-way-bill 01 and 02. E-way-bill 01 is individual e-way-bills. E-way-bill EWB02 is a consolidated e-way-bill. See, one truck, if you see, assuming that I have one full truck of goods, then what we'll do, only one single e-way-bill is required. See, for example, I'm handing over this to one transport agency called VRL Transport. That guy, what they do, he will collect it from me, he will collect it from Ranjit, he will collect it from Roy sir, and he will put everything into one lorry. So one lorry will have transport, when they are transporting, they will be having different invoices, and because of that, they have to raise a different, they will have a different e-way bill also. In such cases, they can put everything into one bucket and raise a e-way bill 02. E-way bill 02 is a consolidation, because if you give all 200 e-way bill to a lorry driver, he is already an uneducated person, he will not be able to substantiate. So one single consolidated e-way bill will be provided in e-way bill 02. Now we have a brainstorming thing, but let me just give you a couple of practical things. See, how do you transport the goods? One is you can transport by way of own conveyance. That is my own vehicle. I have a car, I will transport in that. Then EBN, that is e-way bill is required. E-way bill is required. If it is a commercial goods, I'm doing it for business purpose, e-way bill is required. Vehicle number should be mentioned. E-way bill, if you see, there are two parts, part A, part B. E-way bill 01 has two parts, part A, part B. Part A is all particulars which cannot be amended. Once it is generated. Part B is the vehicle number. You can change it n number of times, because say for example, you have to send some goods from Cochin to Delhi. First, it will be transported in one vehicle from Kochi to say Coimbatore. From Coimbatore, it will be loaded into another vehicle. From another vehicle, it will go to Uttar Pradesh. From Uttar Pradesh, it will be transported in another vehicle. Or think of another scenario, your goods are handed over in Kochi, it has gone to the Indian Railway. From Indian Railway to Delhi, Delhi to Delhi railway station to the party. So any permutation combination is possible. So the government also understood it and then give a detailed explanation. Say hired one, e-way bill number, public conveyance, e-way bill number is required. Mention the vehicle number, because when you give it to KSRTC or any other parties, they will give a receipt number, so that you can use it as a requirement in part B. if it is a railway, e-way bill, you have to mention the railway receipt. They will not issue with the, railway doesn't have a, what do you say, the number, vehicle number. So they will give a receipt number. So in part B, you have to mention that. If it is an air, if it is going with the Lufthansa, air consignment note will be issued. Flight doesn't have a number. So the number which you're seeing is not the normal number. So they will give you an air consignment note. Last one is vessel. E-way bill, you have to mention in part B, bill of lading. Bill of lading is to be mentioned. Now, couple of important points. I think we are at 5 o'clock. Can I take another 10 minutes, Roy sir, 10 or 15 minutes? Because I started at 3:10, if I am not wrong. Roy sir? Roy sir, you are there? Okay, as long as, hello? Yeah, so I'll just continue for another 10-15 minutes. So please stay with me. And e-way bill is applicable for supply of goods only or supply of service also. Question is, e-way bill is applicable for supply of goods or supply of service also. Supply of service, how can there be a goods? There is no goods in supply of service. Then where is the concept of e-way bill, right? But assume for a moment, if I am giving, if from Cochin, I'm sending one machine, big machine to Trivandrum for leasing. So what is moving? It is a goods. What is a transaction? Supply of service, because I will be raising a rental income. I'll be raising a rental invoice on them. So you understand that some rule you have to keep it in mind. The moment you talk about e-way bill, forget about your supply concepts. It is only movement, moving from here to there, moving from there to here. So forget about your supply concept, whether it is intrastate supply, interstate supply, whether it is a supply, whether it is a goods or service. No. If it is something which you can see as goods, which you can touch, if it is moving from one place to another place, e-way bill is required. So that is something which you have to keep it in mind. And some cases, if it is an exempted goods, exempted goods, we all know section 2 subsection 17 of the CGST, Central Tax Rate Notification dated 28th June 2017, as amended from time to time. There are plenty of items are being mentioned as exempted goods. If you're dealing in exempted goods, if you're transporting, if you're moving in exempted goods, no e-way bill required. Now, so we already discussed e-way bill is an additional document, not a substitution for tax invoice. I have a lot of case laws which I have to discuss with you, but because of pause of time, I'm just moving. But I can read it through a couple of things. These are all landmark judgments which have come in different high courts, even Kerala High Court, Uttar Pradesh, Allahabad High Court, and Delhi High Courts, and many other high courts. You can see funny observations by the department. See, these are all the unfavorable case laws. See, what happened is one guy has done an intrastate stock transfer with the delivery challan. Intrastate means itself is a supply. You cannot do it with a DC. So UF means unfavorable. Court said nothing doing, you are doing a fraud, pay tax. Vehicle was playing in the wrong direction. See, all of you know that the guy who is transporting the goods from Delhi to Cochin, he doesn't know how to come to Cochin. He doesn't know Malayalam also. He doesn't know Tamil also. He will go in a wrong direction. So instead of taking direction, left direction to the Palakkad, from Palakkad to Trichur, instead if he's going to Shornur, then he doesn't know the way. So even if you are going in the wrong direction, court said nothing doing. It is, you have to pay. It is unfavorable court order. E-way bill wrong number, motor vehicle number is wrongly mentioned. Instead of TN14, they mentioned TN13, something like that. Wrong vehicle number mentioned, unfavorable. E-way bill validity expired. Please be very careful. E-way bill has a validity. If it is expired, then it is called as if it is not available with you. Classic example is, that IRCTC train ticket, Tatkal ticket, or online tickets. Once that passenger list is finally prepared, whatever you are having it in your hand as train ticket, IRCTC ticket in the waiting list is as if it is deemed to be not valid. The same way, once it is expired, no validity at all. And there are a couple of other unfavorable judgments. There are favorable judgments also. You can go through it, and very interesting aspects. And then government understood that these e-way bills would be prepared by most of the people who would be uneducated people in the warehouse, etc. So they said that there could be some minor mistakes which could be possible. Say, for example, spelling mistake in the name of the consigner. Say, for example, somebody writes my name as Rajeev. Somebody will write RAJEEV. So that is quite normal. So those kind of spelling mistakes are there, then doesn't matter. They said you pay 500 rupees, get out of it. Error in PIN code. Sometimes there will be small error in PIN code. Error in address. So this four, the small mistakes, kutty mistakes. Then they said minor discrepancies, no need to penalize the people. As I said, part A and part B are there. Part A, once generated, cannot be modified, but part B can be modified n number of times. Now, e-way bill rules, a notification circular, all these things we already discussed this. The officer can detain the goods, stop the goods, they can inspect the goods. And now, who are all required to generate this e-way bill? Very, very interesting. Registered person who causes movement of goods. So unregistered person, no need to get it registered. I mean, no need to go for e-way bill. Registered person who causes movement, not supply, movement. That is key word here. And consignment value exceeding 50,000. Say, for example, consignment value means what? Say, for example, my laptop cost is say 40,000 plus GST. It comes to 52,000, assume. Now, consignment value means your invoice value plus taxes. So many people will understand that consignment value means invoice, the product value. No, it is including GST. So if it is exceeding 50,000, you are liable to raise a e-way bill. But my humble request, being a GST practicing professional, I would recommend go for e-way bill even if it is a small amount, because people, it is very difficult to substantiate the department officials that it is only less than 50,000. And it has to be raised before commencement of the goods, movement of goods in part A, and part B, you can update it as many as time as possible, and a unique number will be generated that is called e-way bill number. Okay, who all can raise the e-way bill? Transporter can raise, and the supply consigner can raise, and consignee can also raise. So here you look at the beauty, e-way bill, they're not using the word supplier, recipient, etc. They're using consigner, consignee, transporter. Consigner and supplier may be different, can be different. See, I can buy from, say, for example, company called Samsung here, and then I myself can send it. So I would be the consigner. Supplier would be Samsung, but consigner would be me. So like that. And there are cases with respect to job work and handcraft goods. Little be careful with it. Handicraft goods and then job work, there's a special treatment. And now let's go to transport by road. I already explained what are the details required. Transport by railway, I explained you. And air also I explained, vessel also I explained. And transporter and e-way bill. E-way bill can be generated by the transporter. I already explained that. And now let's go to how does the e-way bill looks like? This is the form of e-way bill. You can see it. You can see one barcode, and then that is why that barcode. Future government wants to use the device, and you know how the Google Pay and all works, right? Just scan it, you will get all the information of that party, and then you can make the payment. Same way, if the officer is scanning this, he will get all the details of this product. What are all the products, what is the value, everything can be taken from this barcode. That is the use of this barcode. Anyway, change of conveyance. I told you already, from Cochin to Delhi, if you are transporting, conveyance has to be changed multiple times, from Coimbatore or from Uttar Pradesh multiple times. No problem. It's absolutely fine. And assignment of e-way bill. Can the e-way bill be assigned to someone? Yes, it is possible. Only by the transporter. Or consigner, recipient, or transporter may assign e-way bill to a registered person. Say, for example, I will be handing it over to VRL Logistics in Cochin, but VRL may not have, may not have a trip to Delhi. So, but there is an alternative party called, say, Parveen Travels. They will be having consignment going to Delhi. So, what VRL will do? VRL will assign this to Parveen Travels, and Parveen Travels will become the transporter. At that time, assignment of this e-way bill is also possible. Consolidated e-way bill, we already discussed about it, and e-way bill versus GSTR1. E-way bill, once you raise it, the particulars will be available in GSTR1, but need not be all e-way bills need not be a supply. As I said few minutes back, assuming that I'm transporting one machine from Cochin to Trivandrum for my project, for client's project, and where I'm charging rental thing as my income, no need to come into GST1. There is no supply of goods. Cancellation of e-way bill, very, very important. Once you raise the e-way bill, within 24 hours, you have to cancel it. Otherwise, you cannot cancel it. So cancellation also, there are some restrictions. They are saying that once the goods are inspected by the department, you cannot cancel it. Okay. Cancellation, very, very important. And validity of e-way bill, extremely important nowadays. Extremely important, because this is a plenty of case which we are receiving now, left to right to center. I have plenty of practical examples. Because of course of time, I'm just giving you provisions. Up to 100 kilometers one day, that is a validity. Then they changed it to 200 kilometers. That is very recently, 1st January 2021 onwards. Each 200 kilometers, 1 day validity. Say, for example, goods have to travel from Trivandrum to Cochin, and assume that the distance is 201 kilometers. Then that transport will get 2 days validity, because more than 200 kilometers. If there is a part thereof, it will be equal to 1 day. Assuming that the distance from Trivandrum to Cochin is 199 kilometers, only 1 day validity. And if it is an over-dimensional cargo, so you would have seen this kind of vehicle on the road, right? So you can see the screen. This is called over-dimensional cargo. These vehicles won't run more than 20 kilometers, maybe 30, 40 kilometers only they will run. Or maximum 30 kilometers they will run, because it is a big cargo. So for those cargo, over-dimensional cargo, validity is 20 kilometers 1 day. Say, for example, from Trivandrum to Cochin, if it is 200 kilometers, that transporter will get a 10 days validity. Okay. And if it is expired, what will do? See, for example, now different things can happen, right? Say, for example, the vehicle is started from Trivandrum to, it is coming to Cochin. In Kollam or in Kottayam, suddenly the breakdown happened, and it is having only 1 day validity. What will you do? Now, in such cases, within 8 hours from the expiry, within 8 hours within the expiry, you have to, if there is a sufficient reason, you can extend the validity of e-way bill. You can extend the validity of e-way bill. And deemed acceptance, because once you raise a e-way bill, the recipient can reject it within 72 hours of raising e-way bill. And there are cases as per section rule 138.14, where they are mentioning that following cases e-way bill is not required. You can go through the list. I will repeat, rule 138.14, the cases have been mentioned. See, for example, LPG gas, supply of household cases. See, all your houses, the LPG will come, right? That is also movement of goods. They said not required. Postal baggage, kerosene oil, natural gas, jewelry, goldsmith, jewelry and all. If you give e-way bill, somebody will crack, somebody will steal the information online and will understand exactly Kalyan Jewellers transporting the jewelry from Chennai to Cochin. Robbery, very, very easy, because you cannot say that, you cannot log into the income department website. If you are giving all the vehicle number TN141348 is the vehicle is a mini lorry, and you are mentioning this is moving, and all these things, if you give it, the robbers can easily track it and then say that, okay, this is the vehicle in which the golds are moving. So because of safety reason, they removed a couple of items, currency of course, and so all these items are being removed. And non-motorized conveyance also not required. You can see all these things were not required. And there are transit cargo to landlocked countries, very, very simple. Say, for example, Nepal, Bhutan and all, they don't have a I mean, they don't have a harbor or anything like that. So all these things will come to India, and then from India it will go to Nepal and Bhutan, etc. So at that cases, they don't require e-way bill. You know, all these containers will go to one particular empty containers. That is also goods. Anything movable is goods. Inside container is something different. Empty container is also considered as a good. So they said empty cargo container not required. Weighbridge and LPG, empty LPG thing, no e-way bill required to be carried in some cases. And inspection verification goods. So I think that's also e-way bill format. You can see here what are all the particulars given here. I just mentioned it. This is an actual practical form which I brought in. So there are plenty of things which see you can see that the PPT is also running into multiple pages. So I'm stopping here because the e-way bill I've fairly covered it, and I request all of you to go through section rule 138 sub rule 14, where you can see the exempted list in complete manner. So with that, thank you so much for giving me a wonderful opportunity. I will take the questions now. Over to the program coordinators. Roy sir, thank you.
Is there any queries from the participants? If there is any query, I think you can put it into chat box or even the question answer.
Yeah, I'm open for it. So if
Yes.
you have any queries, please do ask, unmute. I don't know whether they are able to unmute, Roy sir.
No, I think they cannot unmute, but they can put it to chat box, I think.
Okay. Thank you, sir. Thank you so much for your kind words. I
think there is no queries or questions. I think probably.
I think I can see some chats coming up.
Yes.
If you have any queries on invoice, registration invoice, credit note, debit note, or e-way bill, so it's a very short span of time. I mean, 2 hours, So if you have any questions, you can ask now.
I don't think there is any question. I think
Okay.
probably I think this is they may be getting this for the first time, and
Deepthi Joseph, I think has written something. I'm not able to see the. You're able to see the chat box.
Chat box. I think chat box, ma'am. I think there is.
I think some queries have come. You're able to see that, sir?
No. I think. I'm not able to see the chat box. Chat box is there, but I think only 1 or 2 that comments only it is. I'm able to see.
Okay.
Is it a query?
I don't know. I'm not able to see that. That's what because I'm presenting, so I'm not able to see that. So if you have any queries, you can always get back to the institute, and we will always be there to clarify that. So no problem, and we'll share the material also with Roy sir, and then you can circulate to all the participants. So
it was, I think, as some of the participants mentioned themselves that it is an excellent session, excellent presentation. And there is no doubt that it is an excellent presentation. Even though you are well-versed or well-experienced in GST and all, at a short time, we request you to be here because today, as everybody knows, Ganesh Professor should have been here, and he had an urgent hospital assignment for his mother. I think for the treatment, he had to go for it. So somehow immediately him and Rajeev was arranged, and you could do justice to the job which was assigned to you by Ganesh Professor. I think I'm no doubt. I think Anyway, it's a big thanks on behalf of ICAI Ernakulam branch as well as the MG University School of Management Studies. I think it's
Thank you.
thanks too for your excellent presentation.
Thank you.
And,